Hello, hello, hello. How is everyone doing? Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. By the way, if you're new here, please do consider subscribing and ringing the bell and hitting the like or dislike button, or both, because it's, as Rich says, it's a bipolar market. If you missed that, go check out Market Overview today, which I think everybody who's tuning into this should definitely be watching, even if you can't watch it live, because we do cover the broad scope. Tesla today, nice little bounce this morning, triggering a small double bottom pattern and then just getting utterly destroyed in the afternoon with the relentless market selling in the Nasdaq. Let's see what people have to say before then. Welcome, welcome, welcome. Wavy here as always. Dave. Yep, we talked about that in market overview. It was what, 410 when we last checked at it, down $100. Yeah, that got destroyed on subscriber growth. We also, yeah, we looked at Peloton we looked at a lot of stuff. We looked at Home Depot, the short hitting the second target. We looked at Apple. Wow. And we looked at the relentless selling pressure. Here's what I'm talking about. I'm just going to put that on. Then here's the Nasdaq. This was the selling pressure in the afternoon. There's your 5-minute chart. Look at the 5-minute pause, like a little 15-minute pause. You're adding up those bars, but this is unrelenting selling, and you can see here's Tesla in the afternoon. Until again, people trying to buy at yesterday's lows, there wasn't a great buy signal there either. There was this was a valid double bottom that triggered, could not get up to the first target, and then rolling over, but it was completely valid again. And then the selling came in and just brutalized it. So was that a valid play? Yes. This is also why you position size appropriately. You don't increase your risk, and you take the plays. You did I know this was going to happen this afternoon? Not in your life. Look, the Nasdaq this morning. This morning there it was up, running up, decent, and then we just this afternoon, even with this pullback this morning, it's like, okay, it's got to get some more selling, and then this afternoon just destroyed it. There was a great little long play this morning with that gap up. I'll just review it. We're going to review the good and the bad here. We're not one of those channels that ignores the bad and just deals the good. We're not like, oh, there wasn't a signal there. Let's just pretend that didn't happen. No, again, part of trading is taking losses, and they're independent events. Okay, just because you lost on the last like double bottom or double top trade or the percent B entry does not mean that the next one is going to be a loser or a winner. Okay, they're independent events, just like flipping a coin. Just because you had 3 heads in a row, does that increase your odds that there's next one's going to be tails? No, it's still a 50-50 outcome. You go off the probabilities. Can you have clusters? Can you get 20 heads in a row? Yeah. The probabilities are slim, but you can have it. But that does not mean if it's a fairly weighted coin, that does not mean anything's wrong. It just means you had one of those outlier events of that many head flips in a row. Here was a little play. So as you know, we go to the gap fill. We go from the prior day's close, 5-minute bar open. Here was just a super aggressive, pulling back that 50% mark and then rotating up and then just breaking out of that with momentum. That was the only little pure momentum play to the upside. Running up, giving a nice base, and then just breaking down from the afternoon, triggering actually that double bottom play, and then that did stop out this afternoon with this. And if you were watching for, again, the gap fill play in the afternoon, you'd have to keep ratcheting up. Remember, you don't just leave it at the open. You keep ratcheting up, and then you watch for the close below 62.5 right here, and then it's, okay, we're just going to target the gap fill. And that was besides going with momentum bars with the Nasdaq, which was just unrelenting in the selling pressure. There were short trades. But if you weren't trading from the short and you took a side of the long and then that stopped out, there was just sit on your hands and wait. Nothing else to do. Because remember, the macro is trumping the micro. Here's your daily. Let me declutter this for a bit. Here's your daily running up into the daily rotation zone. You can see here running up in the 4-hour rotation zone and rotating down. Close back below 1K again. Post market, which we'll just take with a grain of salt because this can whip around so much, but that 986, and remember Netflix missed, so it's going to be really important to watch that Nasdaq on the open tomorrow. We break down here again. The levels haven't really changed. We have 980, then 966. Then we have the intermediate level, but we get especially a key close below 966. We have the gap fill. What are the odds? I think I saw a question in here. Let me scroll back through. Tesla survived today, still above 980. I mean, that's going to be this is going to be the very key line in the sand, especially for tomorrow. Likelihood of a 938 gap fill tomorrow. The only way I see, David, a 938 gap fill tomorrow is if the Nasdaq gets absolutely brutalized. It can happen with Netflix, but you'd really have to have the Nasdaq just major for the full gap fill, because that would just be an absolutely brutal day in Tesla down to, again, the full gap fill would be to 3853. Let's just be accurate with that. I will really start targeting that if we have momentum getting below this 980 and we have if there's no buying pressure in the Nasdaq tomorrow. Keep in mind, as also pointed out with market overview, we have options expiration tomorrow. So generally that's going to be a choppier day, especially going into the afternoon. All right, so I'm expecting more back and forth trading unless we're just go into complete blistering sell mode. But then I'm expecting short covering to go into the afternoon because and Yellen is speaking tomorrow. Covered that also, so she could be trying to jawbone some stability into the markets since it is the Fed speaker blackout period prior to the January 26th meeting. They can't come out and say anything. Normally, if it was not blackout period, I'd expect to see stuff rolling across my news ticker that so-and-so says this, so-and-so says that to try to jawbone the markets back up. The only jawboning you can have tomorrow is really Yellen, the Treasury Secretary. So keep an eye out for that. Other than that, we had just covering a couple things here for market overview. We had this inverse head and shoulders pattern that is triggered in notes. Notes did rally even with the sell-off in the future. So I am watching that the selling might ease up tomorrow, but if there's momentum bars to the downside, you don't fight it and don't try to just pick a bottom, whatever you're trading, especially in something as volatile in Tesla, unless you have a very reliable signal. If you have a reliable signal, hey, we got a great double bottom play, which has a very high probability rate in terms of great signals, and it got stopped out. Does that mean that the signal was wrong? No, it means that we had some major selling come in, and it was not. I'm not saying this is Tesla specific. It was selling again. Tesla's still in that high growth, very high PE stratosphere. But when you see that kind of selling in the Nasdaq, a whole bunch of things are going to get beat up, including some of the other mega caps like Apple got beat up. Home Depot got taken to the woodshed with the second target hit on that double top. So even Microsoft that rallied today, it was up in the morning. It's still got that sort of momentum behind the Activision uh, buyout, and that just rolled over and went sort of kaput in the afternoon. So nothing's surviving this. I had the heat map up during the market overview. Again, this is why you should watch it. I'm sort of plugging that a little here, but you can see. Look at this. And this is without the Netflix after hours. But look, Microsoft just down 0.5%, but Apple down 1%, Amazon down nearly 3%, Google down 1.3%. Disney, and that was Netflix before earnings, was already down 1.48, and now it's dropped $100 after hours. But where there's not a lot of green on this, there's not a lot of green. So that's where it also helps to call that up. I use FinViz for this. We actually have a subscription to FinViz, is use some of the screeners on here. But this is a great thing. You can get free heat maps throughout the day. And it's really great to see the overall market, especially when you see a lot of green shift to red with the afternoon selling. It's all right, don't try to be a hero and call a bottom. Either go with the selling or stand aside. And that's the same advice I will give with Tesla. If we have selling, either you got to go with the selling or stand aside and wait for another potential bottoming pattern. I have no other advice besides that. And you got to trade also. You still got to trade the probabilities. You still have to trade the probabilities. Thank you very much, David. Again, supporting the channel, always appreciated, especially to help pay for the software and everything else that goes on behind the scenes, and some of my time, since this is free. Uh, yes, and Dave, golf clap for Mr. Atkins, David Atkins. Yep, thank you so much. It's all about probabilities and trying to get in when you have the edge. And there are great high probability plays that will still get stopped out. Do you think we could still see a pre-earnings run? Yeah. Uh, if we start getting, if we ease up on some of this selling for a couple days, I think we could still see a pre-earnings run. How much that will be left to be seen. And again, everything to the upside to me is, and I said this over market overview too, you got to manage your stops tightly. You really do. You can't just sit and say, okay, I'm just buying, I'll check back in on it in a few days. It's just going to keep running. This is where you ratchet up your stops and lock in gains. Lock in gains and get your stop to break even on a remaining position. I've talked about this. I started talking about this, I think, even last week, where at key levels, you lock something in, get your stop to break even, and then if it rolls over again, you're out at break even for the second half. You took a shot, but you still lock something in. This is not the time to get greedy with major upside targets. This is the time to be very frugal. And if you catch a low and it runs for 2 or 3 days, fantastic. You got a low that ran for 2 or 3 days. But this is not the kind of thing I wouldn't take a little run-up play and say, okay, I'm going for 1,400. And not in these markets, because the macro is going to trump the micro. No matter what I think of the valuation fundamentally on Tesla, that's not when I'm talking the macro is going to trump the micro. Now, when you have if we get a rip your face off rally in the Nasdaq, which you can get in these kind of rolling into bear markets, you can get the rip your face off rallies, and everybody just piles back into the names that brought them there. That's where fine. Still don't get greedy. You move up your stops because those you can get into sell the rally mode really quick again. I mean, today it was running up in the morning and it didn't even sustain a whole day before we sold the rally. And that's with the rally in the notes, which is what surprised me. But it doesn't matter if it surprised me. You've got to the trick is now managing a position very closely and not taking any rallies for granted in anything. Once Tesla's earnings are out of the way, you don't have much. Again, if we have longer term bear market over the next 2 to 3 months, and you will get bounces in there. But if once Tesla's earnings are out of the way, there is nothing really besides Elon leaks and stuff to try to boost it up, or there's just nothing after that for a while. And just a reminder, going into tomorrow, your weekly rotation zone 956. So watch if it is a down day, watch where it closes in there. And if it closes below 956, it's officially back to neutral mode, and then there's nothing in bullish mode at all. Now, it hasn't triggered the massive double top pattern again, but there's nothing in bullish mode. What does that mean? That means you can still get bullish plays, but as I just said, you have to manage them aggressively. Shashi, thank you so much for the super chat. Thank you again, helping to support this channel. Let's see. FMOC talks the morning of Tesla earnings, unfortunate timing. I actually think we could, unless FMOC announces something earth shattering, I think most of that news is going to be priced in by that point. The only way I see a massive dump based off of FMOC is if they announce something like they're just done with, they're still buying, they're just on the taper of buying. Now if they say, okay, we're just done, we're killing the taper, we're done buying treasuries and mortgage-backed securities, we're just done, and you better be prepared for March because we could hike more than you think at one meeting, then I think we could get a bigger move. Other than that, we might have, if this pauses or we don't get a really relief rally before that, I think we could get a relief rally after the FMOC, and then that will just lead to a longer term better sell position again. So let's see. I'm just seeing if there's anything. Well, this is why you always have to work with, this is why I love the technical analysis, because it takes a lot away, no matter what differing opinions you can have in fundamental valuation, and when technical analysis always works, no, nothing works 100%, but technical analysis can give you at least a roadmap into short-term plays, no matter what your opinion on the longer-term macro. By the way, I can't get bullish on Tesla until it's back above about 1037. Anything else would just be a short-term play like this double bottom that got stopped. It was a valid play, but it got stopped. But I can't get anywhere bullish at least above that level. And that would just be slamming. See, even there, we slamming the other side of the rotation zone. So I got to keep in mind that with the daily. So do not ignore that 4-hour and the daily rotation zones. Is that a huge symmetrical triangle pattern? Are you talking this pattern? I wish I could hide certain lines without it being really tough. Are you talking this? Rich? If they make that announcement, they'll crash the market. They're putting, because even Biden says, hey, it's all in the Fed now. Inflation's all them. So we're going to see what testicular fortitude they have. Weekly chart. Well, that's this big thing. No. There's no real great area for, I guess you could make the case. I wouldn't look at the only one I see. And here's why I hate this. So you break down below that, but here's the key level. Here's the key level for me. So this is why triangles are too tough. I've worked on them for years. I thought they'd be a great trading instrument, and they really aren't. There's too many fake out moves. There's too many. You're better to trade. You could use it as sort of an early warning thing. You just have to manage the position real closely. But then watch, if you're going to try to trade it, this would be, let me undo that. See, this is the defining point of the triangle. That's going to be the key breakdown area anyways. Everything else is just targeting the defining point. So these breakdowns, if you're trading from a triangle, are targeting this defining point, but the real breakdown won't happen until that defining point's broken anyways. That's my 2 cents on triangles. You've heard me talk about them before. They're just not super reliable pattern to trade. They won't backtrack their plan, but they can soften the blow. Well, they're getting into a really tight corner because either they start cutting, the market has a complete fit, and they either have to start hiking, and then they have to stop hiking and then probably start cutting again, or they have to have the Volcker mentality that we're going to get inflation out of the system, we're going to completely tame it, and then we don't care what happens to the market. Because, all right, let's say they do a couple hikes and you see inflation start printing at just 3% year over year, and then what happens if they start cutting again and then it starts printing 4 and 5% again? Then what do you get? Then you're in another major bind, which they'll probably get themselves in an even worse position. So it's going to be super interesting. This year is going to be very interesting in the markets. Period. Period. Is my perspective. That's my perspective. I think we'll get some respites. But there'll be, and people say, "Oh, see, the worst is over," and then it will suck people back into a state of complacency. And oh, that's just my opinion. Well, you already put in the super chat, David. So and you can't even blame a quote like that on fermented beverages. No, again, it's dry January for me. And I wouldn't be drinking during by the way, I do not partake of adult beverages during live streams at all. So I think that would be a disservice to try to be drinking and analyze the markets. Something I shall not do because you don't trade when drink. You don't even analyze the markets and drink because you could come up with some very interesting results. And I would never do that with a live stream because people are looking to for advice and help. And for me to analyze something having to imbibe an adult beverage I could not do that. Could not do that. How exactly does Tesla protect against inflation? I don't know. I mean, you can't because it's going to crunch their margins. And have you seen the price of lithium? Again, we talked about lithium yesterday, but have you seen the price? It's going through the roof right now, which doesn't just affect Tesla. As I said, the lithium thing is not just about Tesla, but pay very close attention because it's going to affect a lot of stuff with the EV markets. And they will. And auto prices are going up, used prices are through the roof, but even auto prices are going up. It's going to get very, very interesting. And you can only pass along a certain amount to the consumer. Now Tesla could probably get away with a little more because it's got such I'll call it a fanatic following, but even them, they're going to get limited at some point. We could probably do a party live stream one day. We could do that on a Friday or Saturday. We could do that after we're done with market analysis. We could do that. I would be up for that. But there will be no market analysis. It will just be shooting the crap, and we'll just chat. Like, hey, we're having a live stream, fun little chat. That could be fun. There is no lithium in the world. SQM holds most in Chile. Yeah, I mean, we should probably have a lithium live stream. That sounded wrong. Uh, that came out. We should have a live stream discussing the mining and holding of lithium. So we need 1,000% more lithium in the next 5 years to meet. It's going to be interesting. I think it caps out at about 6,000 EVs produced right now across everyone. It's a party for you every day. You go, I love this community too. All right. With that, I am going to call it a night. I got to go deal with the doggies and dinner, and it's very cold here, so the dog walks are just no fun. But we will schedule wait till I'm back to please. I would like to have an adult beverage when we do have the fun live stream, so that can be maybe we'll do it closer to the Super Bowl. Stay warm, and everybody else, if you have nice weather, enjoy it. Be on your toes. Be very nimble. If you're not a member of Just Discord, join it, please. And I'll talk to everyone later. Bye for now.